Most first-time homebuyers feel overwhelmed by the financial aspects of buying a house. And if this is you, don't be discouraged, because in this video, I'll guide you on how to financially prepare and turn your dream of homeownership into reality. Before we jump into the guide, don't forget to smash that subscribe button and hit that notification bell to learn more secrets of homeownership success. Imagine finally finding your dream home and it checks all your boxes. It's in the best neighborhood and it's exactly what you've been picturing for years. But just as you're about to make an offer, you realize you can't afford it, or you're just unprepared. What's up, everyone? My name is Tommy and I'm a top producing real estate agent in Chicago. And in this video, we'll talk about how to financially prepare to buy your first house or even your first rental property so you don't have to cry when you miss out on your dream home. Buying your first home is an exciting journey. It's full of big dreams and big decisions. But before you start picking out your new address, there's some crucial financial steps and considerations that you have to tackle. Here's how I'd break it down for first-time buyers to navigate this exciting process successfully. So first things first, the down payment. This is usually the biggest financial hurdle for first-time home buyers. Depending on your loan type and lender, you might need anywhere from 3% to 25% of the home's purchase price. Start by setting a realistic goal based on your target home price and then map out a savings plan. Whether it's cutting back on the non-essential things, right? No more pumpkin spice lattes, or automating some sort of savings directly from every single paycheck that hits your account. Every bit helps in building that down payment fund so that you're ready when it comes time to purchase your home. The next thing to understand is your credit score. Your credit score is like the golden ticket to securing a favorable mortgage. Lenders use this score to gauge your reliability as a borrower, so a higher score can mean a lower interest rate for you. Check your credit report early in your home buying process to really understand where you stand and to correct any errors. If your score needs work, focus on paying down those high interest debts like credit cards that you may have, and definitely avoid opening any new lines of credit in the months leading up to your mortgage application. No buying new furniture or a new car or anything like that. Next thing to work on is the pre-approval process. Once you have a grasp on your credit and your down payment, now you're ready to get pre-approved for a mortgage. You see, the pre-approval is a lender's offer to lend you a certain amount under specific terms. And it's a very powerful and essential tool because it shows sellers that you're serious and prepared to buy. Plus, it gives you a very clear idea of what you can afford, which is critical for effective house hunting. One thing that many buyers overlook is budgeting for additional homeownership costs. You see, owning a home isn't just about the mortgage payment. There are property taxes, homeowners insurance, HOA fees if you're part of a condo association, and maintenance costs to really consider. You want to set aside funds for unexpected repairs. You never know when the furnace might go out, or God forbid, but the roof might need repairs because you got a leak coming through the ceiling. A good rule of thumb for this is to budget about 1 to 3% of your home's purchase price annually for maintenance costs. Another thing to think about is considering the long-term affordability. You want to think long-term when choosing your home. So can you still afford it if life throws you a curveball, something that you couldn't control? What if you want to start a family, or one of your family members or your spouse wants to get their master's degree and go back to school? You want to ensure your new home payment fits comfortably within your broader financial picture. You also want to explore different mortgage options. There's several types of mortgages available: conventional, FHA, VA, and many, many more beyond that. Each come with different requirements and benefits. So make sure you research and talk to multiple lenders to find the best fit for your situation. You also want to think about the closing process. See, closing on a home, it can't be complex and costly. You want to expect to pay anywhere between 2 to 5% of the home's purchase price when it comes to your closing costs. And these fees, they include loan processing, title services, and many other things. Everything that's involved in closing that real estate transaction. So make sure to review your closing disclosure form before signing day so there are no surprises. Purchasing your first home can be complex, but it's also incredibly rewarding. By staying informed and proactive about these key financial steps, you'll not only secure the keys to your new home, but also ensure you're set up for long-term success as a homeowner. What's the biggest challenge you're facing in financially preparing for home ownership? Drop your thoughts in the comment below. Let's dive deeper into the financial prep work for securing that dream home. Keeping the momentum going on your path to homeownership means getting into the details of pre-approval, exploring all your mortgage options, and ensuring you've got a safety net with an emergency fund. So let's get deeper into the pre-approval process. Getting pre-approved isn't just another step. It's an important piece in the home buying process. You see, a pre-approval letter from a lender puts you in a stronger position when you're ready to make an offer, and it lets the sellers know that you're serious, ready, and able to buy. So to get pre-approved, you'll need to provide your lender with some key information, like proof of income, proof of assets, employment verification, and a good credit score. This step not only clarifies how much house you can afford, but also highlights any financial issues you need to address before you actually apply for a loan. Pro tip, don't focus on the purchase price that you're pre-approved for. Really hone in on what the monthly payment, what that carrying cost is to you for buying that home. Knowing your mortgage options is important because choosing the right mortgage is crucial. You've got options like fixed rate, adjustable rate, FHA loans, VA loans, and many, many more beyond that. Each type of mortgage has its pros and its cons. For instance, a fixed rate mortgage keeps your payments stable over the life of the loan, which is great when it comes to planning and stability. On the other hand, though, an adjustable rate mortgage, also known as an ARM, that might start out with a lower monthly payment, which could be a good option if you plan on moving again within a couple of years. Not buying your forever home, you're going to move in the next 3 to 5 years, that's a great option. So it's important. You got to take time to understand the nuances of each option. It's really worth consulting with a mortgage broker or a financial advisor to find the best match for your financial situation and long-term goals. Let's get deeper into the importance of the emergency fund, because I can't overstress this. Having an emergency fund is essential when you're buying a home. The last thing you want is to be caught completely off guard by a sudden job loss, knock on wood, right? Medical bills, or a major home repair, right? Soon after you buy your new home. A solid emergency fund should cover roughly 3 to 6 months of your living expenses. So it'll give you that peace of mind as you transition into home ownership. Here's a sleeper piece of advice that not many think about, and that's staying flexible and staying very informed. Listen, the market changes, rates vary, your own life circumstances can shift at a given moment. So it's important to stay informed about market trends and interest rates, what those movements look like. You want to keep your options open and be willing to adapt your strategy if it means securing a better rate or finding a more suitable property. And when you tackle these steps, you're not just buying a house. You're building a foundation for your financial future. It's about making informed decisions, planning ahead, and ensuring you're ready for the road ahead. If you're ready to take the next step towards your dream home but need personalized advice, just book a consultation with me by clicking the link in the description below. If you found this guide helpful, please like, subscribe, and hit the notification bell to not miss out on more valuable insights about your home ownership journey.